Hello and welcome to the Weekly Forex Outlook video at xm.com. We'll be discussing the data-heavy week ahead, including the latest Fed minutes, as well as Eurozone and UK business surveys. I'm Maria Pachortiz, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, let's begin over in the US, where we got an inflation surprise that pushed the dollar higher. The minutes of the latest Fed meeting will be released on Wednesday. What are we expecting there, and what will it mean for the greenback going forward?
Hello, Maria. It was a pretty good week for the US dollar. As you mentioned, we got some data showing that the US inflation is not cooling down as quickly as investors had hoped. Of course, we got some disappointing retail sales data after that, but the point stands that the US economy seems to be much stronger than anyone thought earlier this year. So traders have been forced to unwind bets of imminent Fed rate cuts, and that has helped the dollar through the interest rate channel. So the bigger story in the US, Maria, is that we've got solid economic growth, a very tight labor market, and persistently high inflation. And that is a cocktail that makes it very difficult for the Fed to cut interest rates. Now, markets have finally gotten that message. We've seen the timing of the first rate cut being pushed out to June, and the market is now pricing in only 4 rate cuts for the entire year, down from 6 rate cuts earlier. So with all of that, the dollar has started to shine once again. The dollar is up 3% already this year against a basket of currencies, and it has rallied even though the stock market has been in a very euphoric mood. Now, that's generally bad news for the dollar. The dollar is a safe haven. When the stock market goes up, that generally diminishes demand for safe havens like the dollar. So the dollar's rally has been quite impressive. I believe that the dollar has started to realign itself with its robust economic fundamentals, and this process might have further to go, considering that the market is still pricing in 4 rate cuts for this year, whereas the Fed has only signaled 3 rate cuts. Now, the minutes on Wednesday will be the next piece of this puzzle. Investors are going to look for any clues on the potential timing of the first rate cut. Now, we've heard from several Fed officials since that meeting. Most of them have preached patience on interest rates. They've warned that it's a little bit premature to even consider rate cuts given how strong the US economy is. And if the minutes echo a similar tone, the dollar rally could gain some more momentum.
Turning to Europe now, the latest round of PMI business surveys will be released on Thursday in both the Eurozone and the UK. How have these economies been doing recently, and how might the upcoming data impact their respective currencies?
Yeah, so these economies haven't been doing that well. In fact, both the Eurozone and the United Kingdom growth has been stagnant for several quarters now. And in fact, we got some data lately showing that the UK has fallen into a minor technical recession. Now, these business surveys are going to tell us whether the situation is improving or worsening, and that is going to allow investors to decipher how quickly these central banks might cut rates. Now, for the United Kingdom, the markets still think that the Bank of England is going to be among the last central banks to cut in this cycle. Even though economic growth is very weak, the fact that inflation in the UK continues to burn quite hot suggests that the Bank of England can't rush into rate cuts. And that has been a major driving factor supporting the pound this year. The pound is the second best performing major currency behind the US dollar. Of course, the pound has also received a boost from the stock market. The pound is highly correlated with the stock market, so it benefits when the stock market goes higher. That said, Maria, this is a dynamic that cuts both ways. So if the stock market suffers a correction, or if UK economic data continues to deteriorate, that might leave the pound vulnerable to a sell-off, especially considering that we have some political uncertainty ahead of a general election this year. Now, in the Eurozone dodged a recession, but the outlook is equally grim. We've seen new business orders falling for 7 consecutive months. That's bad news for future growth. And if the upcoming business surveys show that this trend persists, that would be more bad news for the euro as traders become more confident that the ECB might cut interest rates as early as April.
Marios, thanks so much. This was the Weekly Forex Outlook here at XM.com.